Hello, welcome to US Snipers Podcast. Let's dive into Tesla's volatile ride. It's like a roller coaster, isn't it? With all this bull versus bear chatter.
So what's driving the bearish outlook on Tesla these days?
Well, first we have safety concerns around the robotaxi testing. Even though the autonomous driving tech is improving, the fact that it's still reliant on safety drivers creates a lot of uncertainty. Additionally, shrinking profit margins and weakening cash flow really add fuel to the bearish side, not to mention FSD not meeting full autonomy, something that's been concerning regulators and safety experts alike.
And not to forget Elon Musk's leadership. His declining approval ratings in the US seem to be stirring up some doubt too, right?
Exactly. It's like, if the person driving the ship starts to lose the crew's confidence, you're already in troubled waters. Investors are questioning if Tesla's headed in the right direction given all these issues.
All right, but what about the bullish arguments? There's quite a bit of optimism swirling around, correct?
Absolutely. Despite the bearish signals, there are strong catalysts pushing the long-term bull case. For instance, there's improved sentiment, partly thanks to President Trump, which could help ease some regulatory pressures. Also, Musk has refocused on Tesla's core mission, boosting EV production, developing Robotaxis, and integrating AI-powered robotics.
Yep. And then there's the whole idea of Tesla being a proxy for physical AI, right? Combining manufacturing prowess with cutting-edge software and robotics.
It's kind of like having a Swiss Army knife. It's not just one tool. Tesla is diversifying into FSD, robotaxi, even humanoid robots like Optimus, which could even be mass-produced for a fraction of the cost by 2030. This diversification is seen as an immense call option for investors.
That's pretty fascinating. But then we get these wild price target estimates from analysts, right? Ranging from something as low as $19.05 to $500 per share?
Oh, definitely. And that massive spread reflects the deep uncertainty out there. Analysts are essentially saying these targets aren't exact predictions, they're more like guardrails. The median one-year price target hovers around 307.23, hinting at a potential downside even if 12-month targets from some are more optimistic, like 352.
Right. Speaking of uncertainty, what about the political environment? Elon Musk's roller coaster relationship with Donald Trump seems to be a wild card for Tesla's stock.
Exactly. Initially, Trump's alliance helped Tesla's stock soar, with investors banking on a more favorable regulatory climate. But then, as the relationship soured and discord emerged, the ticker took a hit. Now, even with Trump's softening stance, the risks and policy uncertainties remain a significant factor.
Yeah, definitely. I find it interesting how these political dynamics can sway investor confidence so strongly. But with the volatile market, isn't it a bit overblown sometimes?
That's a fair point. Though one could argue that high-profile political endorsements or disputes naturally amplify perceptions. It's like a magnifying glass over Tesla's underlying challenges and prospects.
Now let's delve into Tesla's autonomous driving initiatives. How critical are these developments to the overall narrative?
They're super critical. Tesla's FSD and Robotaxi are the linchpins of its expansion plan. Bulls are cheering about the potential $750 billion revenue stream from autonomous rides, and Tesla's vertical integration is a serious advantage, owning everything from software to charging infrastructure. But of course, the skeptics remain circumspect given the FSD's current limitations and reliance on human safety drivers.
Yeah, for sure. The dichotomy here is really stark. We see a vision for the future that's groundbreaking, and yet the present issues are hard to ignore.
Exactly, it's like being caught between what could be and what is. And that gap between hype and practical application creates a lot of headwinds for Tesla.
And then there's the market headwinds in Tesla's core EV business, right? Things like declining deliveries and market share losses seem pretty challenging.
Right on. In key markets like California, Germany, and France, Tesla's facing stiffer competition. With deliveries dropping about 13.5% in Q2 and EV registrations falling, it's a signal that even as Tesla ventures into new tech and services, its core business is under pressure.
It almost feels like Tesla is juggling too many balls at once, exploding with innovation on one hand and, core issues on the other.
That's a great analogy. Like, it's trying to be a tech unicorn and a traditional automaker simultaneously. And this, in turn, affects sentiment among institutional investors. Large holders are reportedly down to like 48.88%, which is a drop that shouldn't be ignored.
Yep. With all these dynamics, what's the overall consensus among Wall Street analysts regarding Tesla's rating?
Most analysts seem to lean towards a hold rating. Out of 37 analysts, 14 recommend buy, 15 hold, and 8 suggest sell. This mixed sentiment indicates that while there's potential for explosive growth, the current uncertainties, like production issues and the actual rollout of future tech, mean caution is still warranted.
It sounds like Tesla is walking a tightrope between high expectations and very real immediate challenges.
Precisely. And if analysts' price targets ranging so wildly tell us anything, it's that the future of Tesla is anything but set in stone. There's a lot riding on how these technology developments, political dynamics, and market challenges play out over the next few years.
Yeah, absolutely. It's truly a story of innovation clashing with reality. But hey, do you think there's a chance that optimism may eventually win out?
Well, there's certainly potential. If Tesla can overcome its current headwinds, like improving FSD reliability and boosting its core EV numbers, the bullish factors, such as its strategic direction and growing AI capabilities, could pave the way for a strong recovery.
Though I respectfully challenge that a bit, given the serious concerns around safety and emerging competition, don't you think the risks could tip the scales?
That's a valid critique. The risks are significant, and unless Tesla can demonstrate clear milestones in removing safety driver mandates and regain investor confidence, the buoyant narrative may remain just that, a narrative.
Yep, exactly. So in essence, Tesla is at this volatile crossroads where both innovation and challenges coexist, making it one of the most debated stocks right now.
Spot on. It's a volatile ride that's drawing both fervent support and harsh skepticism. Investors are trying to figure out if, Tesla's next chapter is a blockbuster or just another stumble in the evolving tech landscape.
Right. And that's what makes following Tesla so exciting and nerve-wracking at the same time?
Exactly. Innovation, headwinds, political drama, all in one package. It's a story that will keep the markets buzzing.
And with that, we come to the end of today's deep dive. Thanks for joining the discussion and sharing these insights.
Absolutely. Thanks for tuning in to US Snipers Podcast. Don't forget to subscribe, like, and comment down below. And if there's any topic you'd like us to discuss, please leave it in the comments below.